Yeah, good morning, everyone. Yesterday we saw US market more of a flattish after a very strong bounce on day before yesterday. Yesterday, US market remained sideways, and even futures are more of a soft. And even Asian markets are also after yesterday's strong move has remained sideways today, though Japan is up mainly because yesterday it was closed. Here in India as well, the expectations are that more of a sideways type of movement in today's trade. Now, I'll request technical team to take up first.
Thank you, sir. Good morning, all of you. We already we mentioned last week that Nifty break 17,540 level. Then we see the next important resistance around 17,700 and 800 and upside. So Nifty trading in upper range, and we see the Nifty facing the immediate resistance around this level, that is 17,740 and 800. Below important support place around 17,570, 17,400 at downside. If Nifty managed to sustain about this level, then we expect further rally. Otherwise, we see some profitability at this level. Next, immediate negative side around 17,400 below. Then we see the further sell off. Otherwise, Nifty trading within this range only. Bank Nifty also trading in upper range. Next immediate resistance place around 39 150 200 in upside, and support place around 38 500 and downside. So we expect the 17,570. 17,570. Stock specific, Tatacom looks positive at current level above 1090. We expect further rally towards 1160 and keep a stop loss 1060 at downside. That's it for technical derivative guys and trade.
Yeah, thank you, Vikas. Good morning, everyone. So, as for derivatives data front, we are seeing in yesterday trading session also I mentioned that once if Nifty manages to go above 17,800 level, then only the long position will get carried on towards the 18,000 to 18,200 level. Currently, we expect a range bound momentum because if we compare the OI position on the monthly basis, at 17,700, almost around 1.5 positions of character positions are added on at a 17,700 level. So till the point of time Nifty is not getting stable above 17,700 level, till that point of time we might not witness any fresh rally in the market. Once 17,700 current positions get unwinded and shifted on the upper end, then only we expect the momentum of 100 to 150 points on the upper end more. Currently the range of 17,700 to 18,000 level is very difficult for the market to get sustained and cross over, because if you look at the FI position and the index future positions and index option position, we are seeing that in index option almost in yesterday's session around 1100 crore positions got added up. So this 1100 crore is almost from the call writer position front, because we are seeing the call writer positions are getting added on at the nearest strike. While from the put writer positions, we are seeing that at 17,600 and 300 strike, the put writer positions are getting added up. So nearest support for the market would be 17,600 level. Current scenario for the market is positive, but as per the data point, we need to watch out how the weekly index option positions and FI positions are coming out. So clear view for the market will be visible from the next week. Currently in today's trading session, we expect some range bound momentum, while we are seeing that the PCRO yesterday closed at 1.24 level. So PCRO is still at the positive rate and still at the stable rate till it's holding the support of 1.15 level. India VIX at the another data factor yesterday gave closed below 6%. So this is a positive thing. India VIX was holding a strong point at 18.5 level. So it came down below 18.5 level. So if in today's trading session and weekly closing of India VIX goes below 18.5 level, then this would be a positive sign for the market, and again the volatility will get decreased in the market, and again we might see some positive outcome in the market. So currently in today's trading session we might not witness any some major pullback or pull down in the market. So hold your long position with the support of 17,600 level, and on the upper end, once if Nifty manages to get stable about 17,700 level, then create a new long positions. From the stock specific and sector specific, we expect banking counter to show some positive strength in the market. Currently from the banking counter, we expect Can Bank, Bank Baroda to show, and Federal Bank. These three counter looks positive, while from another counter from the auto and tire counter is Apollo Tire. Apollo Tire has shown us a strong breakout in yesterday trading session. We have also recommended a buy position on Apollo Tire, so keep watch on this three counter. Thank you.
Good morning. Syrma SGS Technology, it's a new IPO that will be opening today, and it will be closing on 18th August. The price band is rupees 209 to 220 rupees. In the pre-IPO placement which happened in the month of May, I think the price at which it was done was 290 rupees. So the price has been revised down. So that can be perceived as a bit negative from merchant bankers' point of view. The total issue size is 840 crores, out of which offer for sale is 74 crores, and the balance 766 crores is fresh issue. Now about the company, it's a contract manufacturing company similar to we can say Amber Enterprises that works for AC industry, or maybe Dixon, which works for mobiles, TV, washing machine kind of contract manufacturing work they do. Syrma similarly works for industries like industrial goods, auto, consumer products, healthcare, and IT. The main products of the company, if we see, are PCB boards, which is a printed circuit board, and motherboard. So it is a green color board which you will find in any electronic item, including PC, laptop, consumer appliances. It also makes RFID tags and SSD and USB drives. The main positive for the company is that the strong industry tailwind that the EMS industry is facing. So the industry itself is growing at 25% CAGR, and that is expected to sustain over next 5 years. Now on the negative side, company's growth for FY20 and 21 was slow in single digits compared to the industry, and growth has shot up only in FY22. The EBITDA margins, if we see over last 3 years, they have come down from 16% to 10%. And this can be attributed to the shift in their industry exposure in favor of low margin industries like that of auto compared to high margin industries like pharma. So the mix has changed in favor of low margin industries. This has resulted in also decline in ROC from 22% to 15% over last 3 years. Our strong outlook for the EMS industry is negated by the average business performance of Syrma. And further, we believe that valuations at which it is coming at 54 times FY22 PE is on the higher side, and already discounts the strong growth outlook for the future, thereby limiting upside on the listing. So therefore, we think that the issue is fully priced, and that is why we have a neutral rating on the IPO. Coming to result, yesterday Sapphire Foods result was above expectation. Revenue was 5% above expectation and at rupees 546 crores, and it grew by 10% quarter on quarter. There was expectation that inflation would eat into margins. However, company was able to pass on bulk of the raw material inflation, and gross margins declined marginally by around 1% from normal levels. However, EBITDA margins were maintained at March quarter level at around 20.2% versus expectation of 17.5-18%. So it has performed well on margin front. Second thing, on Sri Lanka, the management said that worst is behind, and things will gradually improve over there. So we expect company sales to double over next 3 years, and we are positive on Sapphire Foods. Thank you.
Good morning. Bharat Forge announced its result. The result was ahead of expectation. Revenue came in at 1,759 crores versus an expectation of 1,663 crore, which grew by 5% sequentially and 28% on a YOY basis. EBITDA margin came in at 24.7%. However, EBITDA was lower by 25 crores on account of forex loss adjusted, because of which margin should have been at 26.1% as against an expectation of 25.5%. The automotive export revenue grew, driven by both commercial and passenger vehicle segments. The geopolitical crisis impacted overall demand and supply chain. Exports added to around 60% of the company's revenue. The company is expecting growth in the EV sector as it already has strong demands and positive cash flow in the sector. Going forward into Q2 of FY23, there are tremendous cost pressures which are beginning to ease off. And as the cost pressures ease off, the margins will improve by around 100 bips. The stock is trading at a PE of 22.3 times FY24 EPS. Thank you.
Tata Consumer had a call after the result, and we yesterday said that the result is weak on account of volume growth in India. The volume growth was subdued, but we may see some correction or sideways movement in the near term, but long-term outlook for the company continue to remain positive. See, there are multiple drivers in this company which the company is developing. Currently, the major profitability is contributed by tea business, that is Tata Tea, and then salt business, Tata Salt, and then coffee business, which they have export and all. Then there are some international business where the focus is limited. But the new business which the company is developing currently under the leadership of Mr. Sunil D'Souza is they are developing Sampann brand, which is mainly for the grain and everything, masala, grain, everything. Then Himalaya they are developing. Earlier it was just water. Now they are venturing into other product also. Then then Tata Water also they are focusing, where in the copper water they are coming out and is getting prominence. Then coffee also retailing they are focusing in India, and then Soulfull recently they acquired ready to eat brand which is they are developing, and then definitely Starbucks is also as of now break even, but over a period can turn around and generate good return and valuations. So all these brands company is investing along with the existing development of Tata Tea and Tata Salt. So what we see that over a period, few of them will definitely get much bigger and will generate a lot of value for the company. So long-term outlook for the company remain very strong. If you see the valuation X Starbucks, then the valuation is also seems reasonable at around 44-45 times, considering that the other player like Dabur and all are trading at 43-44 times. So valuations also reasonable. So there is a long growth expected, but that will have impact over a period of time, not in the near term. So outlook remain continuous positive. The stock can remain sideways for some time, but over a period, if some product start performing, then we will see good run up in the stock. Then another one stock, that is Sangvi Mover, that is also came up with the number yesterday. This was a Q1 number. Generally Q1 is softer than Q4, but this time Q1 performance at EBITDA level was even better than the Q4 numbers. That is indicating a strong tailwind for the industry. It's basically a big high size crane hiring industry. Around 40% of revenue come from windmill industry. We are seeing some revival in the windmill business as well in the near recent past, and with the ordering of fresh round of bidding and all, wherein solar and wind are tendered together. So there is some good demand coming from the wind side as well. And apart from that, the other capital goods industry also require a lot of heavy engineering, requires big cranes to install the machines and all. So we are seeing, along with capital goods performing well, this industry is also likely to do well. And quite possible that company performance can improve from here. Even the order book also, company has indicated that right now it is having around order book of around 333 crores, which was around 290 crore at the end of the Q4. So order book is also growing. So apparently looks positive. Valuations are also attractive at 6 times EV by EBITDA on trailing basis. So stock looks positive from here. Then Trent come up with the number. It's a retailing company. So this, along with all the retail company, this company has performed very well and up to the mark, like what it has done in the past. The 3-year CAGR number is 29%, whereas we had seen for other company 10%, 12% and all. Even DMart was at 19%, but Trent has come up with 29% CAGR 3-year number. So that's very exciting and encouraging. Valuations are definitely costly. It's at around 36 times EV by EBITDA as compared to other company retailer good companies at around 25, 26 times. So pricing in the good performance of the company. Outlook remain positive for Trent from here. Then Bata also came up with the number, and the numbers were below expectations. Here the number came, sales was up by around 41% quarter on quarter and 253% year on year. But if you take 3-year CAGR, it was at somewhere around 3-4%. So quite low as compared to the pre-COVID level. And even the EBITDA margin came lower than expected at around 26% versus last quarter expectation of 28.5%. Then Page Industry came up with good number. They had announced result ahead of expectation numbers, wherein revenue grew by around 167% year on year and 20% quarter on quarter. Revenue came at 1,340 versus expectation of 1,250 crores. And EBITDA margin also came ahead of expectation at around 22% versus expectation of 21.5%. Then Apollo Hospital came up with the results below expectations. Here, the revenue growth year on year was flattish, and margin also saw some decline as compared to expectations in last year. So margins were around 100 bips lower than the expectation at around 12.9%. Then Aurobindo Pharma also reported below expectation numbers. Revenue grew by around 10% year on year, and EBITDA margin came lower at around 15% versus expectation of 17.5% and last year 21%. So now I'll hand it over to commodity team, please.
Thank you, sir. Good morning, everyone. Yesterday we have seen commodities having a good run up. Today we expect prices to cool off since dollar index is holding at a support area of 104.5, 105. It is a support zone, so maybe a pullback from here will lead commodities to cool off a bit. So anyways, gold also is resisting 52,500. So for a trading purpose, as long as it is holding below 52,500, one can sell for a target of 52,100 to 52,000 with a stop loss of 52,600. Similarly, silver also is resisting 59, 200, 300 levels. So trading for a trading purpose, one can sell for the target of 57, 800, 700 levels on the downside. Crude do may cool off till 74, 73, 73.50. So whereby again it can be bought. So it will be in a trading range from 75.50 to 73.50. So trading within the range is recommended. Natural gas 685 would be a good level to enter long, and it should witness the range bound movement from 680 to 700 odd levels. Copper to may test 680 to 83 levels, whereby again it is expected to cool down. So again 670 is expected on downside, whereby 670, 666 seems to be a base where one can go long again. Um, Zinc also 323, aluminum 216 again can be entered long. But for a now, for the moment, it looks like commodities should cool down. So for trading purpose, one can sell with a strict stop loss. But again, on dips, it can be bought. So it will be a range bound movement for the day. Yeah, thank you very much. Ria can take over from you.
Thank you, sir. So, on the currency front, where the dollar index has dropped around 3.5% from the highs that we have last seen on July 14. So the decline has come because there is an anticipation that the U.S. inflation data has cooled off from the highs, and of course, then there is also bets that Fed might even cool off its with the rate hike, where it was going for 75 bips very aggressively. It might cool off to 50 bips and so on. But I think take into factor that the inflation is still quite high of what the Fed's benchmark is, which is 2%. There is still a long way to go with respect to the rate hikes as well as with the quantitative tightening. So on the contrary part, the major weightage in the dollar index is euro, and if you look at the whole euro altogether, there is a recessionary risk that is there that pertains into the EU zone. So a euro could still weaken, and then there is energy crisis that could pull down euro again to the parity. So the weakness into the euro should boost the strength into the dollar index going forward, and I think it holding the levels of 105 is indicative of the same. So the forecast on the dollar is that it will continue to remain strong. For the Indian rupee, well, there is inflation data that is scheduled for today, and the anticipation with respect to that is that it will ease around 7%. So the same could be seen in the momentum into the Indian rupee. Uh, it has opened on an appreciative tone around 79.72. Looking at the longer range, it is respecting the support of 79 and 79.15. So for the intraday, the strategy that one might opt is going with the resistance and support. I think I think the consolidation could be seen into the Indian rupee in today's session. 79.87 is the resistance, and 79.60 is the support for the Indian rupee. I think it should hold the support in the intraday session. So if there is a dip, going long on the lows is the strategy that one should follow. Some weakness could be seen into the Euro INR and GBP INR. One could sell the euro for around the current trading levels for the target of 81.90. You can keep the stop loss at 82.50. Same with the GBP INR as well. 97.50 should act as a very strong resistance in the intraday sessions. And if it breaches the level of 97, one could go short for the target of 96.60. So that's the strategy on the currency front. Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.